Hey everyone, Jo here, and today let's talk about how to set up your small business to be financially healthy from the viewpoint of making sure that you put profit at the forefront of everything that you do in your business. Now, this is a 5-part series. This is part 5 of that series. And if you run through the whole of the series, then at the end you'll know what areas that you actually need to work on, which you need to then prioritize as well in order to get your business finances in order and ensure that you are in control of your money and are not having your money control you. So just to recap, in part 1 we talked about bank accounts and that you should have a separate bank account for your business. In part 2, we talked about checking in on your money mindset in relation to how you handle your business finances and uncovering your money personality profile, which will give you invaluable insights into how you do money. In part 3, we talked about how, with a few simple adjustments to how you manage your money, you can even out the highs and the lows in your cash flow. In part 4, we talked about paying yourself and thinking of yourself as an employee of the business. So that was from a practical point of view and a mindset point of view. And then today, well, we're talking about keeping your emphasis on the holy grail for business owners, and that's profit. But before we get into the content, be sure to hit the like button and subscribe to ensure that you get all my tips, techniques, and strategies for taking your money situation from chaos at whatever level it's at the moment to clarity. And that's in your business and personal finances and with your money mindset, which covers both personal and business financing. So today, the aim of the game of business, which is what we're talking about, the aim of the game of business is to put profit first. Now, there's actually a book with this very title, Profit First, by Mike Michalowicz. If you've not read that book, then go and check it out. It's, there's an audio book. Mike's very funny to listen to. You can get it on hardback. I'm sure you can get it on Kindle as well. And I know sometimes there are in fact, definitely can get it on Kindle because there are offers on. I've seen them come through from time to time. So however you best consume information, then this is something worth adding to the list. But let's get back to the topic at hand, which is creating your own profit plan. So what you need to do is establish a minimum profit level for your business. Now, this is the profit level that you desire after you have paid yourself your consistent salary level, which we talked about in the last session, in session 4 of this series, and that was all about paying yourself. So you've set yourself your consistent salary level, which also helps with cash flow, and it helps even out those highs and lows in the cash flow within your business. So once you've worked that out, you still want to save a little bit of profit. You don't just want to earn for that, earn money for that, and be in business for that consistent salary. So you need to be taking something out for profit. It depends where your business is, what level of profit you can start taking out of your business and putting to one side. When I say taking out, I'm talking about putting it into savings and putting it somewhere separate to then your normal cash flow. You start off with 1% if that's all you can afford. That's a great start. The key is to start with something that you can afford. And then you can just quickly build up as you start to make improvements each and every month as you're putting that emphasis on profit. And yes, you're looking at increasing sales, but you're also looking at becoming very frugal in your business. I mean, do you even know how much it costs you to run your business, month in, month out, and how much difference it is between what you need to spend and what you actually spend? Because often I find people are spending money in their business they don't necessarily need to. And then, do you know what? At the end of the month, there's nothing left for the owner of the business, which is really sad position to be in. So by putting this emphasis on profit, we can start focusing on making sure there is profit available, making sure there's enough money for you to take out a wage as well. Now, if your business is fairly new or things are just really tight, start off with 1% profit, and also keep your, you might need to keep your consistent salary level lower than what you would want, but you start don't miss a step. You start now, you still have the profit and you still have the consistent salary. And then you can build on the profit levels and build on your consistent salary levels as well. Then before you make any other allocations from your sales income for the month, or you might do this allocation weekly or fortnightly, whichever is best for you and your business, you allocate the profit first by transferring that percentage to savings. And we're creating a savings buffer here. And at the same time as building up that cash pot of money, we're also working on our money mindset at the same time, because we are allowing ourselves to have money available, have abundance available that we're not touching and we know is always there. It's given us that security blanket again, which helps with our money mindset. So there are two advantages then here. We're having the actual savings and helping to improve our money mindset, and are getting into creating a savings habit as well, which again is part of the mindset work. So that savings buffer, now I do recommend 5 to 6 months worth of ongoing expenses. You build it up to that level, very much like you would create an emergency fund in your personal finances. This needs to be separate, because right back at video 1, when I was talking about having a separate bank account, we are keeping our business separate from our personal finances. We want to deal with all the business transactions within the business accounts, and we want to deal with our personal finances within our personal accounts. So we do need a buffer in each. We certainly do need one in your business account. Once you've got up to the 5 or 6 months worth of ongoing expenses, that kind of level, then you can start to use the profit for allocations back to you. And I'll talk about that in a moment. So how do you divide up actually your money each and every month, each time that you're doing this allocation, weekly or fortnightly, whenever it is? Well, the percentages you will use will depend on your particular business. If you read Mike's book, he does give some suggestions there, and you could work towards something like that, or you could spend a little bit of time working with your financial coach or your accountant and work out these percentages that are relevant to your business. But how we allocate the money, that income that's come in for the month or however often you're doing this split, you take the profit allocation into savings account first. Then don't forget remember your tax allocation. Then pay yourself your consistent salary, pay all your other employees, and then pay your ongoing costs. That's your costs that are fixed within your business. You need to pay these things, whether they're paid monthly, quarterly, or annually. You need to pay them. So things like your website for your accountant. And if you're paying things like your accountant, if you're not paying them monthly and you just pay them, well, maybe quarterly or even annually, make sure that you're putting money away each month so that you're building up the reserve to make sure you can pay that bigger amount when that particular month arrives, when you need to make that payment. And then after you've paid all that, what is left is for your expenses, because we've already taken out the profit. We know we're covered with a tax man. You're covered. You've paid all the things that have got to be paid. What is left is for your expenses. And if there's no money in that account, then you can't make payments. You can't just buy things. And this is where it really does help cut down on frivolous and flamboyant spending and unnecessary spending in your business. And the system is that simple. Once you've got it set up, there is a little bit of setup. And once you've worked out your percentages, and then you can quickly do that calculation of where all the money is going. You can do that each and every time you allocate money. Like I said, that's simple once that setup is done. Now, just going back to that emergency buffer in your savings, once you've got that savings buffer to that emergency fund level that you require, you can then start a new profit allocation account, or you can keep everything in the same account. But when you leave everything in the same account, just remember in the future that you need to leave that buffer in there for the emergency that obviously we hope never happens, but we don't want to be dipping into that emergency fund amount because it's there as a safety buffer for when it is really needed. So you're then allowing money to build up, that profit to build up over and above what's in your savings buffer, what's in your emergency buffer. And then every quarter or annually, or you could even do it every 6 months, but you don't want to be doing this monthly. The shortest period should be quarterly. But however often you decide to do it, that you can then pay yourself a bonus from the profit pool. Knowing that you've got absolutely everything else in your business covered, it's nice and financially healthy. So you can give yourself a bonus and then deal with that bonus in your personal finances. So that's it. 5 things that you have highlighted over this series, that if you take action, you can actually start taking this action immediately as well. You will start to set up your small business to be financially healthy. And yes, there is some work to do in the short term as you get some of these things set up. But once they're set up, then you can be dealing with your finances in a relatively short amount of time each month or each week, whenever however often you decide that it is best for you to deal with this money situation within your business. So like I said, that's it from me today, and I'll see you next time with the next topic, which will be around money mindset and business and personal finances. So until then.